Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. As the bullish traders battled it out, we can see that the key level, that is at 65.7080, remains intact, and with the 60-day simple moving average just close to there at 65.97, should offer good demand if we see any weakness. However, this looks unlikely as the market is edging higher and closer towards its objective of 67 figure 45, and if we see a break above there could lead on to further to 68 cents. In economic data, according to the Australian Bureau of Statistics, Australian retail sales was stronger than expected, with growth twice as strong as forecasted in May at 0.6%. This has added uncertainty about whether the Reserve Bank of Australia could remain hawkish longer than expected. While following yesterday, the minutes of the Reserve Bank of Australia June monetary policy meeting released indicated that the board judged the case for holding rates steady as stronger than for hiking rates. Looking ahead to this week, the main event is the non-farm payrolls data, with an expected forecast of 194,000 jobs added in June from 272,000 in May. No doubt liquidity may be a little bit on the thinner side, as the US market will be closed in observance for Independence Day. Meanwhile, speaking on a panel at the European Central Bank Conference in Portugal, though, Fed Chairman Jerome Powell acknowledged that the Fed had made a lot of progress on inflation. However, Powell refrained from speculating on when interest rates might be cut, continuing the waiting game on rate cuts from the central bank. The euro still maintains its bullish stance since rebounding off that key level, which was at 106.7075, and from there has posted a hammer in New York and now looks further to the upside, which could progress further from 107.6575 and on to 108.3040, where the market should be reassessed and see where the US dollar it did slip overnight to 105.65. A weaker Japanese yen lingers into Wednesday, even though the US dollar did ease slightly, as I mentioned, to 105.65. Despite the lack of any intervention signals from the Bank of Japan, trading the dollar yen does carry significant risk due to the sharp price fluctuations and high volatility that we saw here in April. With extreme overbought conditions and along with that with an overheated ADX, I'm still waiting for this downward challenge that could reach the broad uptrend around 157.70.90. Sterling a little bit whipsaw but stronger in the overnight session and now looks on towards 127.2030 to 127.90.95, given the fact that we have closed above the level of 126.60. All eyes will be on the upcoming UK election, and along with that, with the US non-farm payrolls, no doubt there'll be much volatility. But thin liquidity could be the problem due to the fact that the UK election polling does start on July the 4th, which coincides with the US Independence Day celebrations. With the support seen around that bottom side at 125.65.70, I do anticipate with the strength of the technicals coming back into play, should keep the bullish path, as I mentioned, to 128. Turning to gold, the market was a little bit whipsaw, but hasn't cancelled out that engulfing candle, as we do need to see the break of 2,342. If so, that may see a further rally onto 2,380 to 2,400. It is a key level, so do keep an eye on that. But while intact, we should not rule out further down tests, as the bears may overthrow this topside challenge and look back towards the bottom side around 2,300 and reassess as the base still holds around 2,250.60. Having broke above the $82 mark for West Texas Intermediate crude, we can see the market is a little bit weaker due to the stab action, and now the price is breaking down with the bearish divergence in play here, as we've got a high with the high seen here around 81, and then we've got a low on the RSI and the high printed around 83.60. And if its current pattern intends to break down further, then we could be looking back towards that key level of 79.70.75 and reassess from there. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest report, and I hope you enjoy the great start to the day.